Hey everyone, if you're looking to invest in real estate, specifically in the Lehigh Valley area, or just in general, and you want to look at a specific deal, and especially this deal, which is in my view a bad deal, stick around. I'm going to go through this specific deal, all the details, all the numbers, and my personal opinion on it, and why I would have specifically passed on the deal, and why I did pass on the deal. But stick around, and we'll go through the deal. If you're new to the channel, welcome. My name is John Cummings. I'm with Better Homes and Gardens Cassidon Realty, and my hope for this channel is to provide you with any information that you may need for your real estate needs, whether you're an active investor, whether you're looking to buy your first home, or whether you're just looking at specific markets in the area. Feel free to reach out anytime. All my information is in the description below. Feel free to leave comments, subscribe, reach out. I'm an open book, and I try to provide as much value and information as I possibly can. And today, again, we're going to go over a specific real estate investing deal that somebody that I knew that was looking to get into real estate investing sent to me for my expertise in what I thought about the deal and whether or not they should pursue buying the property. And I want to go through all the specific details and why the series of steps and thoughts that I had when I was thinking about the property, and how you can just quickly make decisions on these things without analyzing, taking 25-30 minutes just to analyze one deal. Usually you try to knock as many out as you possibly can because there's just so many out there to look at. But let's go through the numbers and we'll check it out. So this specific deal is on the MLS. And now I'll just start off by saying if there's an investment property on the MLS, it's likely not a deal, right? If it's on there for less than 40 days, and this was on market for 36 days, and I will highlight that this is under agreement. So someone did feel that this was a deal, and there's a number of reasons that may be, but I specifically passed on this, and I told the individual that was discussing with me to pass. Specifically, this person is someone newer to investing, and this just wouldn't be a deal that I would have recommended for them. And I'll go through the reasons why. But nice property, it has they're saying it's 2 units, but they have a little warehouse that they're leasing as well. And they're leasing through March of 2024, which is actually coming up soon. That's one of the first things that I noticed, is that this is leased up to March, and the rent is fairly high, $2,400 a month. It is a 4-bedroom, 2-bath, but $2,400 a month is a hefty price for rents. I know that rents are going up, but still, that's $2,400 a month is not something to scoff at. You want to make sure your rents are affordable so that you have a large renter pool. You don't want to be crunched and stressed out every time you have a vacancy, especially for a newer investor to get into this. And that's a huge chunk of the profit there, or just to cover the mortgage. So the second thing, even without looking at the comments or anything, I want to see what is this even going to cover a mortgage, right? So most investors are using some sort of leverage or a mortgage company. They're using some type of financial backing, whether through a bank, a private investor, or whatever it may be, right? So you want to see if this is even going to cover that. Otherwise, you're just going to buy the property, you just get foreclosed on. So the first thing that I have done if I'm looking at a deal, the ask price is $595,000. So you can go to any mortgage calculator, right, and just type in $595,000. Down payment is 25%, which is typical for banks to ask for investment properties. Interest rate 7.25. It could be a little bit lower. Depending on the situation. For me, it would probably be a little bit lower, but I like to keep this higher because I want to look at worst case scenario, right? So worst case scenario, I get a 7.25 interest rate, 30-year term rate. As this isn't a commercial, this wouldn't be a commercial loan. The property taxes, which you pull right off of the MLS, 4354. and you put it in here. Home insurance, $1,200 a month that's kind of a standard what I use. $100 a month. It might be a little bit less, it might be a little bit more, but that's just kind of a a standard number that I use. Just go calculate, and this is going to be your PITI, so your monthly payment. This is what your monthly payment is. $3,507.04. So that's the number that you're going to have to come up with every month just to keep that property. And that's including your taxes and your insurance, right? So that's a very important number that you want to make sure you're at least covering this. At very minimum, that's what you need to cover. So go back to here. These are the rents that this realtor is saying that they're getting. Now, I will tell you right now, these numbers are not always correct. They are not always correct. Sometimes there's concessions in here that they don't put in. Yes, maybe they're getting $2,400 a month, but maybe they gave 3 months free. That's basically a rent reduction, and that won't be in this, right? So that's one of those things that you will not see. The rents may look high, but they may not be paying these rents, and you won't know that. You can get the rent roll, and you got to confirm everything, but the way I like to evaluate these things is just by doing what I would call the worst and the best case scenario. So I want to put all of the, if everything goes to hell, am I going to at least be able to cover the mortgage, right? But I also want to see if this is even worth my time to look at. So based on the purchase price of $595,000, I know that I need $3,507 a month just to cover that spread. So without getting into the rent rolls and requesting things from the realtor or the the individual, without wasting my time or their time, I just look at what they put in here. Now I know that these might be wrong, and a lot of times they are, but if we use their numbers, they're making $2,400, $3,800, over a little over $4,000. So just just looking at it quickly, yes, a little over $4,000 is going to cover this. It's around $4,500. So it looks like that you're gonna pocket $1,000 a month, which is a great spread. $1,000 per month of profit sounds good. So just your quick check is to get this mortgage calculator and see if you're even gonna cover the mortgage. And if you're gonna cover it by like $50, just pass. It's not, maybe not pass, but it's not gonna work at that purchase price, and you might have to do something else, right? So that checks my first box. You're going to cover the mortgage, and you got a significant amount of profit. So next thing I would do is put it into basically this spreadsheet, which I've developed over time, and basically I use this spreadsheet, and this is if I want to if I'm looking for private money, if I'm working with other investors or whatever, I use this Excel sheet to to send out if I'm looking for funds. And it's a great little spreadsheet. It has all the profit interest. If you have general partners, if you're working with preferred returns, limited partners, it's just great. They have the IRR calculations and the loan amortization. But this is just, I use the financials tab just to kind of get a quick look at what I'm looking into. So I put in the rents here, $2,400, $1,453, and $650. So it comes out a little over $4,500. So I always take out a vacancy of minimum 7%. So right off the bat, I'm taking off 7%. Now, remember, when we looked back at this unit itself, it could potentially be vacant as of March. So coming up pretty quickly. So you might be stressing right when you close on a property if this person doesn't, up the lease. But that's besides the point at this moment. So I'm taking out the 7% vacancy. And then the other thing I'm doing is, I usually put in all of the expenses, but just for a quick check, this is my second box that needs to be checked. I will go to the listing, and let's just assume all their numbers are correct, right? We're just going to assume, just for the quick check. They're saying operating expenses of $5,483. Okay, I will tell you again that these are not always correct, and oftentimes they won't include the taxes. Now, anyone that owns property knows that you're going to have to pay taxes, whether you like it or not, whether they put that number in here or not. I will say, though, that this agent did include this $4,354 in this net. So they have their gross of $54,000. They took out the taxes of $43.54, and they also took out the insurance, which again was right around $1,200, a little bit less. So they're saying that the only expenses in this property are the taxes and the insurance, which, to be honest with you, it's not correct, but that's what they're saying. So we'll just go based off that number, that $5,483 to start. So we put in the expenses of $5,483, and based on the rents that we're getting and the vacancy number that we're using, which, you know, it's a little bit low. We go 7 to 10%, right? As is, you want to be safe. And you subtract. So that's basically, this is what you're coming up with your gross rent. This is your gross rent. And then you're going to take out your expenses, which we got from the MLS listing. And we're going to come up with an NOI of $44,770, or $3,730.87 a month in net operating income. So basically your profit, right? However, this is profit before you're going to pay the mortgage. And what was, you know, the mortgage that we were going to be paying? Around $3,500. So based on this NOI of $44,750, I like to go with a cap rate of around 8.5%. So that 8.5% gives me a property valuation of $526,712. So in order for me to want to buy this property, it would need to be at $526,712. Now, why is that the case? 526,712. So if it was at $526,712 with the interest rate at 7.125%, I solve to a cash on cash return. So at this number, I'm going to pay down payment of closing costs of $147,479. That's based on this number and putting 25% down, and then just an estimate of closing costs. So this is my net profit. These are my down payments. I want to know how much money am I going to make for the money that I put down. And I want at least an 8% return. At least an 8% return. Why do I pick 8% return? Okay, well, if we think about it, we can just go and put our money in short-term T-bills with the government, which is basically risk-free, and we can get 5%. 6% if we go in CDs, or there's other vehicles that are very risk, there's minimal risk, and we can get a 5% return, maybe a 6% return. So why would I put in all the effort, all the extra stress of renting and fixing tenants and toilets and managing everything and going through this whole transaction if I could just put it in a T-bill with no risk? I know there's no downside. So why would I do that? I would just put it in a T-bill. So it has to be at this number in order for it to work. Unfortunately, this property is not. It's at $595,000. So $595,000. If we put that number in, we look at what does that do to our cash on cash return. It's less than 5%. This is less than 5%. If everything that the realtor is saying is correct, and if all of our expenses just boil down to the taxes and insurance, all we're getting is a 5% return. To me, that doesn't make any sense to put your money into that. You could just put it into a T-bill and make the same thing with no risk. Doesn't make any sense. Now, to further my point, typically you're going to have maintenance and repairs on a property, which on this listing is not included in this number. There's no expenses taken out for maintenance. Nothing. Zero. Which, if you know anything about properties, you're going to have to put some maintenance in. So, let's just go and see. I put in, repairs and maintenance for the year of $2,000, which honestly might be a little low. Which increases your expenses. It's going to reduce your NOI. So now the property value, where I need to be the property to be at, is $502,347. That's a difference of $92,000 based on what they're asking. So Now what does this do to my cash on cash return? With just some repairs, just one hot water heater, right? Just one hot water heater takes it from, just about a 5% to a 3.7% cash on cash return. There's some bank accounts that you might be able to get, probably not 3%, but you're getting to the arena where it's really not even worth it. Sure, people might come back to that argument and say, well, you're making a monthly, you're making monthly cash flow. You could hold on to the property. Yes, sure, and that's a great argument. Real estate is a long-term game, and you're not just going to make money based on the rents. However, you're just cutting it a little slim, and if you really want to make money in real estate and you want to get to that next level with your rentals, most investors don't even look at things unless they're, bigger time investors. They get so many deals, they don't even look at anything unless it's a 10 to 15% return just based on the rents. Now, me personally, I'm not that big time, and a lot of people that I know aren't, and some people are just trying to get into the game. And if you're just trying to get into the game, you need a hefty margin because you don't have the type of, room for error and the kind of cash to just sit and feed properties if something goes wrong. You need to have that extra space. That's why I use the specific numbers of the 8.5%, and I need that cash on cash return to be at least 8%. So when I was asked about this deal, these are the steps that I went through, and I knew right after doing just a quick. I probably did this in about 3 minutes to just do a quick. Is this going to work? No, yes or no. But I went through it with this individual to show them exactly why and how I'm coming up with a no, and why it doesn't make sense for them or me to purchase this property. But the question needs to be asked is, this property is under agreement. Well, who bought it if it's not a deal? Well, a couple things here. Now, they're asking $595,000. I don't know. I won't know what the price of this actually is that they offered and are closing on until this closes. It could be less. But since it was on the market for 36 days, my bet, I'd be willing to bet that they did reduce it just slightly, but I don't think it's going to be a whole lot. I could be wrong. They may have gotten it asking. But there wasn't highest and best offer call for this, so I don't really expect it to go over. But there could be, individuals out there. There's a lot of investors out there that are sitting on cash. They have 1031 exchanges. They're buying these properties all cashes. They're going to cash flow like crazy either way. And they have that staying power. They have those reserves to hold on to this property. Even if the cash flow is minimal, they don't really need to, they don't need that hefty margin right away, especially in the Lehigh Valley area. Since it's such an appreciating area, they're going to make their money on the back end when they, cash out, refinance, or they sell. All they want to do is hold on to the property, really. And their goal isn't necessarily cash on cash return right off the bat. But for, individuals like me, I play it very conservatively, very safe. It takes me a lot longer to get anywhere with it or get, good deals, but I feel a lot better and I sleep well at night because of that. And for any new investors out there that are looking to do something similar, this is a process that I go through, and I recommend that you do the same. It really doesn't take long once you get to know, the properties and you make your own little system. But a quick check always is to just use the mortgage calculator. At very minimum, you want to cover that mortgage, because otherwise you're going to be one of those individuals that is handing the keys back to the bank, and that's the last thing that you want to be doing as an investor. You don't want to be one of those people. So that concludes my deep dive of the deal that I went through with this individual. I hope that helps any of you out there that are looking to invest in real estate. Real estate investing is one of the most profitable, powerful ways to grow your wealth, and I recommend anyone do so. If you have questions or comments, feel free to reach out. Like the video, subscribe. You call me, text me. All my information, again, it's in the description below. And if you have a deal that you want to run by someone that is a little more knowledgeable in the space, especially in the Lehigh Valley, but even anywhere else, I have people bring deals to me all the time, and they ask me about them, and I've done partnerships before, and I'm willing to partner with anybody. If you have a deal that is a deal, I always tell people the money will come to you if you find the deals, and I'd be happy to fund or partner with any other deals out there with you as well. So if you have a deal, run it by me. Check out my information below, and let's connect. But otherwise, I hope to see you guys around the neighborhood, and happy investing.